If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Razak at CMtrading. Today's July 14th, 2020, and today is Tuesday morning. So looking at the highlights of the day, the NASDAQ sells off sharply after an exaggerated move to the upside after it capitulated. And we mentioned this yesterday. It looked like it was making a V formation on the upside. But first, let's take a look at the various markets. So there's no major economic event scheduled for today. So looking at the currencies as the indices make a correction, the dollar gains versus the major pairs. We're going to take a look at that in just a second. And looking at the NASDAQ, obviously the Dow Jones also sharp sell-off yesterday of over 200 points. Okay, and really not much because we really are focused on the NASDAQ. The NASDAQ has been the one that has been the propeller on the upside. Now they're all taking a hit. We're going to take a look at the specific stocks. First, looking at the commodities, gold retraces to support at 1800. Oil also retraces just below $40 a barrel. And lastly, looking at the stocks that got beaten up the most, it's the FANG stocks, the ones that carried us the highest or the ones that are carrying us the lowest yesterday. And this is very indicative of this type of market. We're living in a very volatile market, but it's stock specific. It's the FANG stocks that were ones that took us higher and then took us lower. So let's take a look at the markets and see what we can expect from today's trading. So you can't write this stuff up. We're looking at the Euro USD at our 1 hour chart. And this thing is really trading beautifully if we look at this resistance-ish level. At this 113.70-ish level, we hit it and then we're retracing below to 113.37. But altogether, we're watching actually the dollar get kind of weaker in an overall range. Okay, if we look at an upper range like that, it's the first time that we're hitting this upper limit, okay, since the pandemic and since hitting this previous time as well. So ultimately, we're looking for a new range that we'll be trading at, the lower range at 113-ish level and the upper range of 113.70-ish level. But it is making its way to making a correction and getting weaker versus the euro since the pandemic started. Okay, now looking at the GBP USD, same story. Okay, in this case, we actually got weaker on the GBP side. All right, we're going from 126 down to 125. So we may see the euro actually play catch up. There's a little bit of a disparity between how the GBP is responding to the USD, which it's getting weaker, whereas the euro is actually getting stronger. So, with all said and done, this particular symbol has changed character several times. It initially looked like it was the stronger one and initially went, and then it became weaker. So you got to watch this disparity between the euro and the GBP versus the dollar. Now looking at gold, we're tracing to 1797. Let's look at a 1 hour chart. This is the bottom of our range, okay, for now. All right, this is really a supportish level right here at 1790-ish level to 1800-ish level. And so I would look for this to be actually a support. If it does breach it anywhere below 1780, I would look to buy it. Okay, this is really a no-brainer right now as we're going to the second half of the year. And we're also going into the balance of the pandemic going into the fall. I mean, there are some words, like I said yesterday, there are some analysts that are expecting gold to hit 3,000 by the end of the year. I'm less aggressive than that. I think we're going to hit 2,000 by the end of the year, but something to keep on your radar in any case, okay, in any event. Now, looking at oil, we're retracing down to 39.26. Not a big retracement, but enough, okay? So we may find ourselves just trading within this range. The upper range, obviously, 40.80-ish level, $41-ish level, and the lower range, $39, all right? So I do expect us to continue trading in this tighter range unless these lockdowns continue to accelerate, okay, or re-lockdowns as the second wave starts to hit the markets. Now looking at the NASDAQ, this is really the one, okay? If we look at a 1 hour chart, you can see this a little bit clearer. This happened at the end of the day. Okay, what happened in yesterday's trading session is that the markets rallied throughout the beginning of the day from the first 3 hours, and then they capitulated. They got to a point where it was extreme and exaggerated, and selling started to take phase. Now at this point, once the selling started and built up some momentum, this is what happened. This is why you get nosedives in the market. Okay, so we retraced from 11,000 down to 10,620. Now all intents and purposes, if we look at a 10 hour chart, okay, at a weekly chart, not much of a retracement, right? I mean, this has gone from, the beginning of mid-March from 6,500 up to 11,000. That's almost double, okay, in an index, okay? This is not a, easy float, small floated stock that you could push around, okay? This is an index, okay? So with that said, this represents like a lot of major companies. So with that said, it's an extreme move on the upside, and this nosedive is anticipated. The question is which way we're going to go next, okay? So there's one or two scenarios. Either we will continue to make this correction, okay, and hit a certain support level, either at 10,500-ish level, okay, or we'll make an about face and actually challenge this double top, or it may take some time until we challenge that double top. So that could still happen. Now, you got to pay attention to the stocks. Now, when we look at the Dow Jones before we jump into the stocks, we saw it sell off, okay? It's at 25,989 right now. But with that said, okay, this is not that major of a retracement, okay? We hit 26,500-ish level, okay, yesterday, but that's not that major of a retracement altogether, okay? I do expect it to retrace down to 25,500. Anywhere above 26,200-ish level was a clear sell for me, as this has hit this area once before, but never sustaining it, okay? When we look back at this in two more weeks, we'll actually look at these two bars as actually wicks, okay, not really a candle. All right, when we look at these two bars in about 2 weeks, this will be a wick, not a candle like it's showing in right now. So with that said, I think that, this is all an exaggerated move. We're still trading within a range, okay? We haven't made that correctional move on the downside yet, okay? Which may be the beginning of it now as we're, going into the latter part of the summer, and these second waves are actually starting to perk up in several places in the world, firstly, and in the United States, okay? Now, jumping into the individual stocks, they were all weak yesterday, okay? The ones that got beat up the most were the ones that are most volatile, namely Apple, okay, which hit a high of $3.99 yesterday, okay, down to $3.82. That's a $10 retracement. Amazon going from 3,300 down to 3,100-ish level, okay, that's a $200 retracement. Facebook was the weakest one, okay, really ostensibly not making those highs. I expected Facebook to actually retrace at a certain point, and Microsoft got beaten up also from 215 down to 206, all right? So the major stocks, the FANG stocks, Microsoft got beaten up. But when we look at the traditional stocks, and that it's JP Morgan, didn't get beat up so much, all right? $97 and then retracing just less than $1, all right? So with that said, I expect volatility to continue. I do expect some sort of a bounce, okay? Might not happen today, but I do expect some sort of a bounce. This is Fred Razak. I want to wish you guys a great trading day. Thank you.